Hello, it's Adil bringing you a review of the European markets for December the 1st, 2014. Okay, bringing you an intermarket analysis perspective on the European indices. Now, I have done a review already with regards to the FTSE and my explanation of what's going to happen. The recurring theme there is that commodities are down, adding the Swiss vote now as well. Okay, and that's negative for gold. Okay, given the fact that the Swiss haven't obviously voted in favour, they voted against. Okay, so that's a concern for gold bugs out there. Okay, now so that obviously will be negative for commodities, plus the obviously OPEC scenario of not cutting their production, and that obviously has sent oil down to the $66 range. So commodities overall, the theme remains bearish, therefore obviously bearish for the FTSE. And as you can see in my latest tweet, the Aussie and the Kiwi have certainly gapped down with this Sunday night's obviously open with regards to the forex market. So that's bearish. Whenever Aussie and Kiwi move lower, there's generally either growth concerns or obviously geopolitics or socioeconomics, and that's socioeconomics on this occasion. So that's basically what we're dealing with. So happy December. Not long before the Christmas celebrations, and obviously Happy New Year as well to everyone. Early, okay, so this is the last month of the year, last few trading weeks of the year as well, so I wish everybody success and I wish everybody well. Okay, so last week we had the light volume float up manipulation, given the fact that it was Black Friday and obviously Thanksgiving. So the Yanks obviously wanting to keep the markets afloat and keep them higher, so obviously the consumer, which obviously represents a large portion of GDP, the disposable income is spent towards obviously products and services that will keep the economy revived and keep them going. So obviously if the stock market keeps afloat and is held afloat by central banks, as we all know how, then that generally tends to bode well with Miss Yellen's algos that are always running in the US market. So it's always a surprise whenever you have a H&S formation or a bearish formation that you get a short squeeze and everything else is forgotten. Okay, so last week the participation, the volume wasn't there to obviously to influence the markets or force the markets down in any way. This week obviously the volume comes back and the participation comes back. It's going to be very, very interesting. Okay, so my bias obviously you already know is bearish, and there's many reasons why. I've already explained the FTSE from the UK markets perspective, and now I'm going to explain from the European markets perspective. Okay, so yes, recurring theme, commodities down. I mean, the French CAC generally is heavily weighted towards commodities, just like, very similar to the FTSE, and obviously the European Euro 50 stocks and the Euro 350 stocks as well. Germany not as much. Okay, given the fact that it's heavily, it's more biased towards innovation and technology, just like the Nasdaq and the biotechs and the semicons. Okay, and generally speaking, obviously a lower oil price generally will be in favour of German DAX for it to move and propel higher. But given the fact that the overriding theme now is going to be bearish, as I'll put forth in my fundamental arguments. Okay, so my fundamental arguments are these. Okay, so first of all, ECB. ECB anti-QE comments from Mr. Weidman on a Friday. Okay, number one, budget concerns with regards to France move perilously close to become the first Eurozone country to be fined under the EU's latest budget rules, etc., etc. That news was obviously overlooked on a Friday, given the fact that we were obviously short squeezing higher on light volume. Although in the European markets defence, there was stronger German data that obviously propelled and kept it higher. And from my perspective, that's all been factored in now. And one of the most important news over the weekend really is the anti-QE comments from the German-based think tank, okay, and also ECB bank member, okay. Basically, Mrs. Lautenschlaeger, okay, has stated that quantitative easing isn't the right choice for the euro at present, hardening a split amongst policymakers on how to respond to slowing inflation. In consideration of the costs and benefits and the opportunities and risks of a broad purchase program of government bonds does not give a positive outcome, etc., etc. Basically talking QE down. So the bar is certainly high for QE. Any anti-QE comments will obviously hurt sentiment and is negative. Okay, and what's interesting is that the actual Wilshire 5000, which is one of the indexes that I tend to track quite closely, had a bearish engulfing candle. Okay, and from the US market perspective. And also with regards to US markets, they failed. And also you can see here S&P 500 also had a bearish engulfing candle. So overall, the bias was certainly bearish going into the close. Okay, from the US markets perspective. Now, what I'm focused on now is that you have budget concerns, you have anti-QE comments that are resonating. Okay, that generally tends to, and the euro has certainly gapped higher. Okay, on a Sunday night, so higher euro obviously reduces the number of exports. Okay, so that's generally considered negative, i.e., no QE is obviously considered negative. So there's no Kool-Aid to propel the trade higher. Okay, so if there's no Kool-Aid and the Kool-Aid trade is no longer there and the central bank put is no longer there, i.e. there's going to be QE down the road, then why would you be buying the stock market now? Especially with regards to the German DAX failing to hit the 10,000 level even in a light volume manipulated week, i.e. such as the US. Okay, so that's all going to be very, very interesting. Okay, so that's the fundamental backdrop. Okay, now let's have a look at the actual technical backdrop now. Okay, so I've already explained the US markets had a bearish engulfing candle. Now let's have a look at the actual European indices. Okay, so German DAX okay, has a hanging man candlestick. That's very bearish. Okay, from a just from a technical point of view, and if you study Mr. Nissen's candles, Steve Nissen, you understand that that's certainly bearish. Now, from the German DAX perspective, we had a 60 minutes obviously channel, and this channel itself has obviously, as you can see here, is broken now. Now we have the H&S formation, and we have a H&S formation in play. Okay, and you can clearly see you've got your left shoulder, you've had the head, you've got a bearish engulfing candle, bearish consolidation, light volume flow up, perfect scenario for a right shoulder, and down we go. So H&S formation, and you have the unfilled gap below. So watch out for this level below at 9,500, 9,480 below. Okay, that's your potential target going into this week. Okay, given the fact that you've got anti-QE comments. Right, and that's the German DAX perspective. You can look at a 10-minute chart. You can see more or less the same thing. Really, it's potentially a lower high. Okay, now let's have a look at the other indices. Now let's have a look at the French CAC. French CAC, same hanging man potential candlestick, although it did close in the green. Maybe because of the budget concerns, etc., were pushed towards March. But overall, that's, from my perspective, it's certainly considered bearish regardless. Okay, so we've got this diagonal trend line resistance around this region, around the 4390, 4400 level. And if you look at a 60-minute chart, you can see that you've got potential lower highs, and certainly a scenario here for another potential move lower. So this is your diagonal trend line resistance. This is what we're looking at. We obviously potentially have we held this obviously gap level here. You've got this support level, so we're looking for a potential break here, left shoulder, potential head scenario here, looking for a right shoulder, then obviously down we go. And you've got this unfilled gap below around the 4230 level, although you do have previous resistance equal support here at the 4290 level. So watch out for those two levels below. Easy 100-point drop, okay, with regards to the French CAC. Now let's have a look at the rest of the sectors. Indices, sorry, shall we say. Okay, so same thing here with regards to European EuroStoxx 50 diagonal trendline resistance again, although we did have a potential breakout, but we do have a rising a wedge pattern. Okay, so looking for this breakout here, looking for a potential fake out, although if we do connect these two trend lines together, it does give us a clear resistance zone, and we're looking for a potential move lower on this basis. Okay, so watch out for that. It's going to be very interesting. Europe 350, again, hanging man candle, horizontal resistance. Okay, hanging man candle, horizontal resistance, so certainly a bearish sign. Okay, for Europe 350. And the same scenario with regards to the German DAX. You're looking at a H&S formation, so you have a left shoulder here. We've put in the head by making a hit this double top, triple top resistance, looking for a right shoulder, 20 MA moving down, and looking for a clean break on the downside, especially with regards to the anti-QE comments. Okay, so that's basically the outcome and the scenario. Obviously the FTSE you already know, looking for a potential failed bull flag given the fact that commodities are lower, and hey presto, you have a down market. Okay, so I've given you the fundamental arguments, I've given you an argument from an intermarket analysis perspective, and now you have the technical reason as well. So watch out for the H&S and the German DAX and the Europe 350, and obviously the daily candle remains a hanging man, therefore looking for a reversal, and down we go. It was very tempting, the 10,000 level on the German DAX. That's very unlikely now, folks. Okay, so risk on, risk off, wax on, wax off. Goodbye now.